Wings up, everybody. Wings up.
Wings up, wings up.
Wings up. Here we are
Wings
again.
up.
Wings up, family. How's everybody doing?
It's a
Wings
wonderful
up.
day.
Wings up, Benny.
Everybody's great.
Good,
Yes, blessed
good,
to
good,
be here.
good, good, good. Hopefully everybody is doing well today and everyone's at their computers and prepared to learn. I'm excited about today. Good to see you on the call, Damon and Cleveland and Natalie. And good to see you, Lewis and Benny. Wow, Thurman, so many of you all jumping on the call today. Rob, good to see you. Good to see you. You guys have been turning in a lot of deals this week too, so that's been good. Uh Sean, call me, good job, man. I've seen you turning in a lot of deals this week. I know Thurman was working on some things, and I know Lewis is working on some things. We got some feedback for you, Lewis. So I'll call you about your files, okay? So you guys keep up that energy. It's good. It's good. It's good. 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 All right. I see my mother on the call, Ophelia County. Good to have you on the call, mother. She's on mute. I see my baby on the call, Savannah. She's joining the call with us today. She says she wants to learn how to do commercial lending. Good to have you on the call, Savannah.
Uh, thank you.
Tanya Allen, how you doing? Chicago, Chi-Town.
I'm great. How are you?
I'm doing good. I'm doing good. Okay, I think I got everybody. Mark, I see you. Catherine. Hey, Catherine. I'm always happy to see Catherine on these calls. She's the life of the party.
You forgot me, Mo.
And Eva. Oh, you know I can't forget
You know
Eva.
I'm here.
Eva, I'm sorry. Your screen is black, so I don't even. It doesn't show you like. There you go. Now I see you. Now I see you.
Sorry about that.
I'm definitely glad to have you on the call. Did I forget anyone? I don't think I forget anybody. Okay, everybody. Let's get started. Okay, so welcome to the 6-month commercial lending training course. About time, right? we got
Yes, I've been waiting patiently.
we got a good 5, almost 6 months of this. Okay, so this is going to be very interesting, to say the least. Where's my? Hold on, guys. Okay, I was trying to do it. So we should have 17 people on here today. What time is it? Let's see. I'm trying to wait for everybody to get here.
We
Uh,
do have 17,
we got 17.
including you, including you.
Oh, okay. So everyone's here. All right. It's good. Good. Excellent. Hold on. Give me 1 second, everyone. I'm coming.
Where's Joey?
He's got a big party.
Yeah, right. He don't know how to party. Right.
Session time. There we go. Here we go. Here we go. Here we go. All right. So you guys know we're going to be covering. Do you guys see the syllabus? Everybody see the syllabus?
Yep.
Yes, sir.
Okay, this
Yes.
is going to give us the outline and kind of keep us on track. Okay, so the 6-month commercial lending broker training program is designed to equip you all with the essential knowledge and the practical skills to become a proficient commercial loan broker. This is what this is all about. This course is going to cover the different loan products. We're going to cover underwriting. We're going to cover sales strategies. We're going to cover legal compliance. We're going to cover ethical considerations in the commercial lending industry. So ethical practices and things of that nature. I'm so sorry, guys. Excuse me. So during this time, this course is going to run between February the 28th to the 16th. Okay, so everything you guys know is all going to be on Zoom. And on the 16th of July, there's going to be a certification exam at the end. So throughout this training, you're going to get handouts, you're going to get study materials, and then you're going to have assessments. Okay, so just be prepared for that. That's going to be out throughout the course. We're not going to do that today. You will get a handout for today afterwards. Okay, so this is what we're going to cover today. Our first session is going to be centered around just the introduction to what is commercial lending. We're going to cover the role and responsibility of the commercial loan broker, so you will know exactly what your role is, and also the overview of the lending market. Okay. All right, you guys with me?
Yes.
All right, let's have some fun. So, is everybody prepared to take notes?
Yes, sir.
Okay.
I'm speaking for everybody.
No.
Okay. Y'all need to be prepared to take your notes because this is going to be a lot of information. It's going to be a lot of information. Give 1 second.
Hey Mo, will this be recorded?
Yes, we're recording this. Absolutely.
Okay. All right, great.
Absolutely. You guys see my screen?
Yeah.
Is it showing commercial lending broker program?
Yes.
Yes, sir.
Okay, perfect. Man, I'm starting to get good at this stuff, huh? This technology. All right, so guys, first of all, the difference between commercial lending and consumer lending is simply you're dealing with businesses. You're dealing with commercial property and business funding. Okay, so just coming in through the door, just know that there is a difference. So you may hear people asking, "Hey, are you a residential broker?" And they're really just asking, "Are you a loan officer for residential homes and things of that nature?" And what you're able to tell them is, "No, I'm a commercial lending broker." Okay, so that's what you're into. This is what you're here to learn. And this is going to be your comprehensive guide to becoming a successful broker. So welcome to this call. And what is commercial lending? Let's start there. Okay. So once again, hopefully you all are in a position to write down. If you're not writing down, you are going to get some handouts, but you need to retain this because these are the things that's going to be asked on the exams and on the test. So when we start referring back to exactly what we studied, this is what you need to know. Okay. So number one, what is it that we are doing? Let's read the quote real quick. To succeed in business, to reach the top, an individual must know all it is possible to know about that business. That's John Paul Getty. Okay. So to succeed in business, to reach the top, an individual must know all it is possible to know about that business. And in order for you guys to be top brokers and understand the commercial lending, market and how it works and how you can make money in this industry, you just got to know as much as you can about this market. I remember when I first started doing commercial, I'm going to be honest, I was scared of it. I was scared of it. It was another animal. And I know a lot of you are feeling the same way, that it's just another beast, okay? But really what commercial lending is, commercial lending really it refers to loans provided to businesses for various purposes, such as expansions, real estate purchases, equipment financing, and working capital. So commercial loans are for businesses are used for businesses for various purposes. Some of them are doing expansions. They want to grow their business, or they want to put, add more real estate to their current dwelling, or they may need funding to expand, whatever the case may be. But this is for businesses that's looking to expand, buy real estate purchases, equipment financing. What about equipment financing? A lot of times we forget that businesses need equipment. They need printer machines. They need all type of equipment that's needed in order to do their job. Press machines, computers, all type of digital things. These are equipment. This is stuff that you can use. And you also can use equipment for, what about transportation business? You can buy a car and a vehicle under equipment, because if you're in the transportation business, guess what? That vehicle is considered to be equipment. So these are things that you will learn as we're going on in this commercial lending. So real estate purchases, equipment financing, and what about working capital? A lot of businesses look for working capital to do what? Meet payroll. I don't know, to pay off some expenses, to increase their marketing budget, right? It's working capital. So a lot of times, when any of you have ever been in business for yourself, you know that it costs money to make money. And most of the time, businesses are looking for ways to get the capital that they need so they can expand. So they excuse me, so they can put together an effective marketing campaign. That's all going to be considered under working capital. That's what working capital is. Sometimes businesses may get into some sort of trouble and need to pay a lump sum of money quickly within the next 4 or 5 days, right? Okay. What type of loan would you get them? Working capital. A working capital loan, something like an MCA, something like that, right? So commercial lending, once again, is for various purposes, such as expansions, real estate purchases, equipment financing, and working capital. So unlike consumer lending, commercial loans focus on business financials, cash flow, and risk assessment. So the difference between how the consumer lending platform weighs out its decisions, it's a lot different than how commercial lending platforms weigh out its decision. For example, from a consumer standpoint, a underwriter and the lending is going to weigh out its decision on lending that individual, that consumer money, number one, based on his credit strength, and then financial strength. How much do you make annually, monthly, weekly? What is your credit score? Okay. These are the two most important things when lenders are lending to consumers. But for commercial, it's different. Commercial lending is based on the performance of that commercial property. You're going to learn things such as DSCR, debt service coverage ratios. That's what you're going to learn here in commercial lending, right? And how we use debt service coverage ratios to determine whether this property is a good cash flowing property or not. Also, commercial lenders and lending look at the deal itself. Does this deal make sense? What's the equitable position in this deal? What's the financial strength of the business? They want to look and see what your history has been as a business for commercial. Have you paid your taxes over the last couple of years? The lending institution is going to look at that, okay, in commercial loans. So it's a lot different when determining whether or not a person qualifies or not. Okay. So, this is why we're on the commercial side of the business. It's a lot more flexible than the consumer side. We will be opening a consumer side soon. Okay. And I don't know maybe if it's going to happen this year. But we will be opening a consumer lending side of the business for G2 as well. Okay, but that is coming soon. There's a lot of things that we have to go through in order to get the proper licensing and things of that nature before we can do that. Okay, so the consumer lending is totally different from commercial lending. Commercial loans are focused on the business financials, the cash flow, and the risk assessment. Okay, that's commercial lending. So you as a broker, ambassador, or in this particular case, a commercial broker, the role and your responsibility is simply an intermediary between the borrower and the lender. Your job is to help businesses secure financing. That's your job. Your job is to get out there and find what businesses are looking for what type of financing. So you're the intermediary between the clients and the financial sources. Your job is to simply help them. So in order to do that, this is why we train on how to talk to customers and what to ask, things of that nature. You want to be able to hear the customer's story. Your job as a loan broker, you want to be able to hear their story so you can hear their needs. In order to be a good broker, it's just not like, hey, okay, you need money for this project. That's it. Let me go. You need to find out exactly what all their needs are. And you do that by asking open-ended questions. Okay, we'll talk about that again in some more sales training. But you ask those open-ended questions so you can understand what the business is in need of. So your job is to be an intermediary. Your job is to be an intermediary between the borrower and the lender, helping the business secure the funding. That's your job, okay? So now there's 6 points and 6 things that you need to understand as your role and responsibility of a commercial loan broker. Number one, you have to understand the client financing needs. You have to understand their financing needs. I'm not just saying how much the client is asking for, but you need to understand in totality what their needs are. Why do they need this amount? Okay. What's the reason behind looking for funding? What is the funding going to accomplish for them? So understanding the client's financing needs is key. Okay, get up. Go. The other point is sourcing suitable loan options. Sourcing suitable loan options. Okay, sourcing suitable loan options. So finding out what type of loan is suitable for your client, because all loans are not suitable for them. But you won't find that out until you understand the different loan programs, which is why you're here. What's suitable? What's the suitable option? So your role is to know where to place them. Some clients don't want a 12-month loan, they want a 30-year loan. Some clients may want a loan that's revolving. Some clients may need something really quick. They don't care about interest rate. So they may need something in the next 3 days to save them from whatever. But you have to know where to source them and where to place them as a client. So you do that by understanding first what their financial needs are. That's important. Understanding what their financial needs are. Thirdly, assisting in the loan application and documentation. One of the things that I found as being a commercial broker is when you start getting involved with the process and getting the documentation and thing and really getting your hands in there and getting, it makes the process so much easier. A lot of times what brokers want to do, and it's okay, they want to just turn in the deal and get out the way. But I tell you all the time, like especially when I get on a call with some of you all and your clients, I said, and you all set up these calls, I said, make sure that you're on the call so you can hear. It's the same thing with assisting in the loan application and the documentation. It's also for your benefit. The more you know how to fill out the application and the documentation, know what documentations are in place, the more you're going to know how to place clients and know how to fill them out and things of that nature. You want to get used to touching these documents in the application and knowing what's in them, especially in your beginning stages. What about negotiating loan terms? That's another key. That's another key. In commercial lending, we're doing a deal right now. I'll use it, Lewis, I'll use your deal for example. We're doing a deal for an Hampton Inn Hotels, Lewis deal. And the client, it's a $24 million deal, and the client did not want to pay 2 points or 2.5 points. We were trying to charge 2.5 points. Is that right, man? No, I'm sorry, 2 points, 2 points total. We were trying to get 2 points total on this deal, and the customer in turn said, no, I'm okay with 1 point or 0.5 point. So with these big deals, especially with commercial, a lot of times you have to be in a position to negotiate terms. So one of the things that I did at that time was I tried to cost justify the 2 points by showing them that I can put $600,000 back into their bottom line utilizing our workplace wellness program. So I did a leverage play. It didn't work for the points, but it did work for him wanting to sign up for the workplace wellness. But he still wanted to come in at a lower point. But just negotiating, I'm just using that for example of negotiating and trying to negotiate loan terms is something that you got to really get good at, okay? Especially when you're doing a lot of bigger deals. But that's part of your role. I wasn't successful in getting higher points, but I was successful in getting the customer to agree to doing workplace wellness, and they have over 500 employees. So, still do the math. So it equaled out. Okay. So ensuring compliance with lending regulations. This is another thing that you want to make sure that we're being compliant when you're speaking to customers and certain things that you're saying to them. You want to learn what is compliance and, what are the things that you can say and what you can't say. What can you post and what can't you post? Okay. There's certain things in this financial industry that'll get you flagged. They'll get you flagged. Okay. The first thing that you want to, the last thing that you want to do is get flagged in the financial industry. The other, for the sixth point, is building relationships with lenders. That's what we do. That's what we do. We build relationships with lenders and financial backers. Okay. So that's your roles and responsibility of a commercial loan broker. Understanding the client's financial needs, sourcing suitable loan options, learning how to place them in the right place, assist the customer and in the loan application and documentation, negotiating loan terms. This is your role. Ensuring compliance with lending regulations, and then building relationships with lenders. You guys got that? Okay. So let's talk about understanding the client's financial needs. A commercial lending broker must assess a client's financial situation, okay? The business goals and funding requirements. Commercial lending broker must assess a client's financial situation, business goals, and funding requirements. For example, if a real estate investor needs $2 million to purchase a multifamily property, the broker, that would be you, evaluates their credit worthiness. You want to know about their credit, okay? Of course, you're going to send in an application and, they're going to put that information on there. But we, as a brokerage, we want to know about the credit worthiness. You want to know too, especially your conversation. You don't necessarily have to run their credit and pull their credit, but you want to know about their credit worthiness. Where are you with your credit? You also want to know about cash flow. You want to learn about cash flow. So the broker evaluates their credit worthiness, their cash flow. How much are you bringing in every month? What's your daily balances? Those are the things that lenders look at. They want to know what your daily balances are, your monthly balances, what type of deposit. They also, another thing that lenders look at, they look at the number of deposits that's made monthly. So say your bank statements may say $100,000 last month, but that came from one deal, opposed to someone else's bank statements that says $100,000 last month, and it came from 4 transactions. That person is going to be looked at to be more credible and secure than the person that had the one transaction. Even though they made the same amount of money and brought the same amount in that month, it looks weaker by having it done in one transaction to a lender because opposed to the 4 transactions. Their thought process is because it's 4 different transactions, that means that they've got action going on. Maybe that one transaction was a fluke. They think things like that. Okay. So these are the things that you have to, when you're out there talking to clients and you're getting a visual just through a mental visual of what their bank statements is going to look like, because you're asking questions. Hey, how's your credit? What's your cash flow? So you're building a mental picture as they're speaking. What's your cash flow like? Like, what do you bring in monthly? Okay. So you want to hear numbers. You don't want to hear, you want to hear, hey, do you file taxes? You file taxes, right? Yes. So these are the things that in conversation that's keeping your antennas up so you can say, hey, listen, let me give you a call tomorrow and give you an application. Let's see if we can get you some funding. Because based on our conversation that we just had tonight or whatever, I may be able to get you some funding. And that's because your antennas is going up because you're being trained. You know that in order for them to get money from you, you want to know what their credit is like. Okay. So you want to know what their cash flow is like. So when it comes to commercial lending, the cash flow is really the top priority. It's not even the person's credit. It's the cash flow. It's what they're making. It's also how long they've been in business. They want to see what the cash flow is and how long you've been making that cash flow. What's the consistency? So as a broker, you have to understand these things. So credit worthiness, cash flow, and investment strategy to determine the best financing options. Okay, an investment strategy to determine the best financing options. All right, you want to understand their financing needs. So when we talk about sourcing suitable loan options, I'm just saying where to place it, right? Brokers connect clients with lenders that offer the most appropriate loan product for them. Everybody's situation is different, but you as a broker need to know where to place them. That's going to come over time with you learning that these lenders or this particular lender may allow this and this particular lender may not allow this. But that's you getting involved with the actual process. So the brokers connect clients with lenders that offer the most appropriate loan products according to their needs. You have to understand what their needs are. What are their financial needs as a broker? And then you have to have suitable loan options according to their need. So what if a business owner needs working capital to expand operations? The broker might identify a lender specializing in business, specializing in business lines of credit or SBA loans that align with the client's revenue or collateral. Okay. So depending on what that customer needs, he needs working capital. He needs working capital. And in this particular scenario, he's trying to expand his operations. So he needs more money to buy more product, to hire more people, to increase their marketing coverage. So now as a broker, you need to understand those needs so you can know where to place them. Why? Number one, there's some time sensitive needs based on that. They may need money as a line of credit, as a revolving, so they can keep reusing it, or they may need this money very quickly, or they may need a certain amount, that lines of credit may just not give you. Of course, the higher, you ask in terms of money with lines of credit, and more, that you have to prove your worthiness of that line of credit. It's easier to get, just for your records and your knowledge, guys, we do lines of credit, and it's much easier to get lines of credit under $150,000 at the cutoff point than going after over 150. Okay. 150,000 is a marketplace where they don't ask for as much documentation that they would ask for if you're trying to get 200,000, if you follow me. So you need to understand that as a broker, that there's thresholds that you don't want to cross when you're trying to find the right financing option. because some of your people may not have all of their documentation together. Some of them may not have filed taxes. They may have only filed it 3 years ago or 2 years ago. Now you can't prove taxes. So now you have to try to find an option that won't look at taxes. That comes by way of you understanding guidelines and understanding the lending capability and the places that you have in hand. Do I have a place that I can get funding for these customers without looking at taxes? Do I have a place where I can get funding without looking at bank statements? Do I have a place to get funded where the credit score is under 600? These are the things that you have to learn when you're talking about sourcing suitable loan options. Where do I place these customers at when I get them? Where do I place them? Okay. How do I identify, what type of lending options that they need? Okay. What about assisting in the loan application and documentation? That's point number three. Point number three. So gathering, as I said earlier, gathering and preparing necessary paperwork ensures a smooth loan approval process. That's a fact. That's a fact. The more that you get involved as a commercial broker, the more you get involved and you have your hands in, okay, the more you'll see the process move smoother, a lot smoother, because guess what? We're all working together unanimously as a team. Okay. So for instance, if a developer applies for a construction loan and the broker helps compile the business financials, project feasibility reports, right? And contractor agreements to meet the lender requirements. So that's a big help. So if the broker is able to, if the broker like yourself is able to compile the business financial, that means getting the P&Ls, getting everything that we're asking for, the 3 months of bank statements, the tax, and have all of those things compiled prior to submitting, that helps the project speed along faster. Because if you don't, what happens now is that we have to go and chase those documents and wait for them to send them, which we will. But if you did have these things ahead of time when submitting these customers, that would make things a lot easier. What about project feasibility reports? People are building projects, they're developing, they have feasibility reports, things of that nature. You have to be able to get those contract agreements, things of that nature. Okay. Those are the things that the lenders are requiring to meet their requirements. So these are the documents, these are some of the documents. And what documents are necessary. You're going to learn that in the training. This is just an overview of what we're going to learn. So I'm just going through the overview. So we're going to get into the documents. We're going to get into the P&Ls. We're going to get into all of those things. Okay, this is just the overview. Negotiating in the long term. This is part of your responsibilities, things that you want to get good at down the line. Brokers advocate for their clients. You got to be your client's advocate, right? You advocate your clients by securing the most favorable rates and terms, putting them in a place where they're going to be happy, or putting them in a loan where they're going to be happy with, their terms. Okay. For example, if a client is approved for a commercial mortgage at 9% interest, and the broker may negotiate with the lender to lower the rate to 8.5 by highlighting this client's strong financials and investment track record, what do you think that client is going to feel like? Man, the client's going to feel like, man, this broker really has my best interest at heart. And that's what you want to be able to, that's what you want all of your clients to feel, that you have their best interest in heart. Okay. Stand out and be a broker that stands out other than not like the others. Be the resourceful one, be the one that knows how to place each client in their prospective places where they belong. Every client shouldn't get a term loan. Every client shouldn't get a line of credit. Every client shouldn't be placed in the, you have to know where to place it. Okay. What about number 5? Number 5, ensuring compliance with lending regulations. Commercial loans must adhere to federal and state regulations. If a business seeks a loan backed by the SBA, the broker ensures all documentations meet SBA guidelines and requirements. So preventing compliance issues that could delay the funding. That's another thing. Not knowing the rules will cost you money. Not knowing if the client is adhering to the regulations that the lender has set out, okay, can cost you funding. So ensuring compliance with the lending, that the customer is being compliant with lending regulations is key. And you'll learn that over time as well. And number 6, building relationships with lenders. Your role is to build relationship with lenders. The more lending power that you have, the better. Okay. And this is what we do at G2 Global Network for you. We go out and we bring in different funding dollars and funding relationships. This is how we're bringing in private money for, different programs or commercial lending. We're going out and finding different loan, direct lenders that we can partner with, and we can sell their money. Remember, we sell money for a living, right? So you do that by strong lending relationship allows brokers to secure better loan terms for clients. For example, by maintaining partnerships with multiple private lenders, okay, a broker can quickly fund a deal for a client needing bridge financing for a commercial property acquisition. Basically, what that means is that because of your relationship with lenders, private lenders, secondary lenders, because of your relationship that you've built and their programs, a good broker can quickly fund this deal quickly because of your relationships that you've built. And that's the part that we come in at with G2 Global Network, is to build all the right relationships and then be able to come and give that to you and say, hey, this is the new relationship that we have in the network. We're able to do this now, okay, because of our relationships. All right? Okay, y'all with me?
Yes, sir.
All right,
Yes, I'm
Yes,
with
I'm
you.
here.
Yes, I'm here. Roger that.
all right. So the lending market. So the overview of the lending market, okay? The commercial lending market consists of various financial institutions. This is the lending market, okay? The commercial lending market consists of various financial institutions, including banks, credit unions, private lenders, and alternative financing companies. And we use all of those. We use banks, credit unions, private lenders, and alternative financing companies. Okay. So there's different type of institutions out there that, that just specialize. Let me tell you, the banks will probably give you more money. Okay. But in terms of like more loan to value money, right? They'll give you more money in terms of that loan to value, give you a higher loan to value. But man, they're gonna ask for everything possible. And the way that they make it so difficult for people to obtain funding is utterly ridiculous. So if you guys have done any type of business with your regular banks, especially, buying properties and things of that nature, I don't know what your experience have been, but the number of things that these banks, ask for, you know, uh, that's why I like dealing with alternative financing companies. It's a lot more uh, uh, lax in terms of, documentation. I like dealing with private lenders because we can, we got direct contact. I like dealing with credit unions as well. Credit unions are good financial institutions, especially for things like gap funding, and we use them a lot for gap funding. We hardly ever use traditional banks for anything. I've never, a matter of fact, I've never closed a deal with a traditional bank. Like using a regular bank, uh, I've never done it. I mean, I don't know about some of you all, but I've never closed a deal with, the Banks of America, your Fifth Third, your Wells Fargo loans, and you have to literally work for that bank to do it anyway. But we stay in the alternative financing arena. We stay in the private lending circle. We stay in the credit union circle, and your secondary banks. That's where we play ball at. Okay, so each lender has unique criteria and loan programs tailored to different business needs. Listen, there's some lenders that it's crazy. There's some lenders have the appetite uh, for taking really high risk loans, like really high risk loans. And then you have other lenders that say, yeah, I don't want to deal with that. I don't want to deal with these really high risk loans and things like that. The default rate is going to be high. I found a lender the other day that specialized in funding for like cannabis grow houses, things of that nature, which was good. I wish we would have had that lender some time ago when we were trying to fund this cannabis deal. But everybody has different appetites for different things, and so the more that we bring more relationships to our G2 Global Network, I think Thurman brought someone now I'm going to be meeting with soon, I guess, about overseas international funding and being able to fund overseas. Okay, so I get a lot of requests and deals sometimes for overseas funding, and I really don't have any place to place it. So things like that. So one of you guys have relationships with people, you can bring them to the network and say, hey, this person might be a good fit for us to help, help to build the puzzle, right? So traditional banks, okay, we're talking about the lending, right? Traditional banks and commercial lending are simply financial institutions that provide loans and credit facilities to businesses for various purposes, such as purchasing real estate, expanding operations, or funding working capital. Now, these banks follow strict underwriting guidelines. We just talked about that. These banks follow strict underwriting guidelines, which is why I don't like regulatory requirements and risk assessments before approving loans. They want to know exactly what your blood type is, how many hairs left on your head, okay? What color is your underwear? They want to know all of these things before they can give you an approval. They got strict underwriting guidelines. And most people a lot of times don't fit that criteria. So this is why people don't use traditional banks, especially in the commercial industry. Okay. Or you think that they come to you for loans to buy their fix and flips or to come and buy a commercial property. The bank is going to ask way too much than what secondary lender is going to ask. So traditional banks are well-established financial institutions that offer commercial loans with strict underwriting criteria. While they provide stability and lower interest rates, which is true, their approval process is often lengthy, making them less ideal for businesses needing quick capital. Everything we just talked about. It's everything we just talked about. They may give you better rates. They may give you uh 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 they may be more stable, but the process is going to be lengthy. And that's just not good for people that's looking for money quickly for their businesses. What about somebody trying to buy a business and they're running with someone else and they lose it to that other person because the bank is just asking for so much when they could have just went to a secondary lender and got a pre-approval? And you know, I don't like traditional banks. So here's some key features of traditional bank commercial lending. Okay, key features of traditional bank commercial lending. Okay, that's going to be lower interest rates. This is what traditional bank offers. Competitive rates for well-qualified borrowers. Well-qualified borrowers. You're talking at 700 credit score. You're talking they've got all the bank statements. They've got the taxes in order. They've got their debt schedules, their P&Ls. They've got their construction budgets. Everything is ready, and everything looks good, and they're well qualified. You get lower interest rate. You get longer loan terms. Okay. So, those are great for buying, properties that, you're going to be in forever. And, you're looking at the long haul. You definitely want to get the lower rate. I'm not saying not to get loans from a traditional bank. If you can, get it, if you can do it. Okay. I've had customers that came to me and I knew they were more qualified to go to a traditional bank, and I sent them to a traditional bank. Why? Because yes, I like making commissions, but I feel like if you do right by the customers and you do right by them, that it'll come back around to you. But so sometimes we, as lenders and brokers, we're just looking at the commission check, and we know that it's not more feasible for them to go with you than going to a traditional bank. I've had people with strong 800 scores, and they're like, "Well, I want to go with you." You can get a better deal going traditional bank. You can. Okay, and that's what you do. You make sure that just be honest with all of your clients. Slow processing time. Man, dealing with traditional banks, it can take weeks or even months for approval. Ain't nobody got time for that. People want to get in and get out. They want to get in and get out. They have strict qualifications, high credit scores, strong financials, extensive paperwork. So these are key features of traditional banks. So when you're dealing with customers and they're saying, "Well, I'm just going to go to my bank," these are some of the things that you can talk to them about. You can let them know, "Hey, you may get a lower rate with going through the bank, but one of the things that they're going to ask for a lot more documentation that you got to prove, opposed to us going to a secondary lender or a alternative financing, or doing an alternative financing option." You can also let them know it's going to be a much slower processing time. Going traditional route can take weeks or even months for approval. And then the last thing is that strict qualification. It's strict qualification, high credit scores, strong financials. That's what you need, right? High credit scores and strong financials. Okay. It's a lot of paperwork. So here's some of your traditional banks that we spoke of earlier: Bank of America, Wells Fargo. This is just a seasoned commercial property investor. This is an example with a high credit score and a strong financial secure a $5 million loan from a traditional bank at 6% interest over 20 years to acquire a high interest, high rise office building. It's just an example. But here's your example of your traditional bank. Okay. Credit unions. All right. Credit unions, we use credit unions a lot too. We use credit unions a lot too. Okay. And we use credit unions because they're more flexible than traditional banks. A lot more flexible. Especially when you're trying to obtain what we call gap fund or gap money. All right. So credit unions are member-owned institutions that offer commercial loans with a more personalized approach. However, membership eligibility, moderate processing speed, and limited funding options may make them less ideal for larger deals. Once again, we use them for things like I said, gap funding, smaller deals. You don't use them for bigger deals because they're limited in their funding. Okay, but you can go to credit unions to do things like get funding for 100,000, 50,000, 75,000. Right. So think about some of the people that want to get fix and flip loans, and they want 100% funding. They don't have the capital, and so we can go a couple of different ways. We can put them on our partner program and see if that works out for them. I know Thurman had a deal earlier today, and we able to do it, but we wasn't able under the partner program, but we wasn't able to do it at the terms they need. We had to come in around 62% loan to value. So they can either do something like that, get with our partner program, or we can get them traditional fix and flip funding. Just say we get them 80% loan on the purchase and then 100% on the rehab. They're going to need 20%. Well, guess what? You can get gap funding or get that 20% from the credit union. So sometimes in those cases, we'll go and get gap funding as long as your credit criteria lines up. That's when your credit comes in. They have a good credit comes in, okay? Because now we can go out and secure another loan for your down payment and closing, so you can have 100% funding and go and flip your properties, pay the loan back, and there you go. It's another way of creative financing. So the key features of credit unions, the reason why we like them, because it's personalized lending approach. Okay, these loans are for the members. They're tailored for the members. They've got competitive rates for members. Interest rates are often lower than private lending, but higher than traditional banks. Okay, moderate approval process, a 30 to 60-day approval timeline depending on financials, and that's depending on what you're getting. If you're getting gap funding, we can get that in like 3 days. It depends on what you're getting. Another thing about credit unions is that they're limited with their funding options, as we stated earlier. Many credit unions cap out at $1 million to $2 million, making large-scale projects difficult to finance. So, we talked about the hotel deal earlier, Lewis's hotel deal. We wouldn't have been able to take that $24 million deal to this credit union, so we would have to place them with a loan outfit that has a stronger lending capability. Okay. So this is one thing you have to learn. So what do we use credit unions for? Things like unsecured money. That's what we use credit unions for. Alternative lenders. Alternative lenders. What are that? What is alternative? Alternative lenders utilize technology and innovative lending models to provide fast and flexible funding solutions. Alternative lenders utilize technology and innovative lending models to provide fast and flexible funding solutions. So they use technology to check the values of properties. They use technology to pull title reports. They use technology to do the desktop appraisals and things of that nature. Right? Why? So they can eliminate time and provide fast and flexible funding solutions. So a lot of alternative lenders will say, hey, you know what? We can fund that commercial real estate project for you in, I don't know, maybe a week or 2 weeks. If we eliminate no appraisal, we can pull the title now and they can get around a lot of those barriers. So these type of lenders are really flexible, and they focus on more revenue based lending. They're looking for what type of revenue is this company generating or going to generate. Working capital loans and other non-traditional financing structure. That's the type of focus that these alternative lenders focus in. Revenue-based lending. They want to know how much money. I mean, you could take somebody with a 500 score and still get them a loan if their revenue is coming in on a monthly basis. Okay, you can give me somebody with a 500 credit score and they're making, $100,000 a month, and okay, they're making $50,000 per month. All right, we can take that and give them a loan based on their cash flow, and not even look at the credit, just based on the cash flow. We have loans like that we can do. So these will come through what's called our alternative lenders. Okay, this will be our alternative lenders. Hard money, MCA, right? So these are lending platforms like Funding Circle, New Silver. These are all different SBG funding. I've funded a lot of business with them. Okay. So these are all different alternative lenders. So just to give you an example, a retail business in need of $200,000 for an expansion gets an alternative lender's revenue-based loan approval in 48 hours, with the repayment tied to 10% of the monthly sales instead of fixed monthly payments. See, creative finance, they want 10% of the monthly sales instead of a fixed monthly payment. So it's good if they feel that company is their sales are going to be increasing. But it's bad if their sales drop, right? But these alternative lenders are willing to take that type of risk. So they have different risk assessments that they look at, risk measurements, okay, that they look at prior to loaning you the money. And most of the time, they want to see that you're actually bringing in this type of capital. So they'll do what's called like a decision logic or a plaid link, and they'll send that to you in order to put your information and log into your bank account. They can go in there and see that you actually do make this type of income, things of that nature. They have different ways to securing their decision with funding. Okay, so these are the alternative lenders. We like alternative lenders, guys. We like private lenders too. All right. So the smart circle for investors and businesses. Private lenders provide custom tailored commercial financing solutions. Custom. Okay. These are custom tailored financial solutions, offering speed, flexibility, and asset-based lending. This is strictly based on the asset. Whether you need capital for real estate investment, business expansions, or short-term funding, private lending eliminates red tape and gets you funded fast. That's why we like private lenders. It eliminates all of red tape. So when you're getting private funding for individuals, just know interest rates are going to be higher, terms are going to be a little bit more strict. Not strict, was a little bit more I don't know, not flexible. It's going to be a little bit more hard. Okay, a little stringent. Okay, so only because this is private money. It's not bank money. It's private money. You might get harder. You may be getting more money and less red tape in terms of getting it. Okay, but the terms on payback is going to be a little bit harder. You might get a higher interest rate. You might get a prepayment penalty. You may get uh, you may have to pay. You may get a balloon on it. Balloon payment. A balloon payment simply means that after it gets to a certain point, 9 to 10 months interest only payment. That on the 10th month, that payment jumps up to 14% or something like that. Okay, so it's called a balloon payment. All right. So the key features of a private lender. Key features of private lending. Lightning fast approvals, funding in 5 to 7 days compared to months with banks. Flexible terms, no strict credit requirements, because it's all asset based. Okay, ideal for real estate and business growth. It's perfect for fix and flips, rental, and commercial expansions. Those are the key features of private lending. So just give you an example of some real estate investor needs $3 million to purchase and renovate a distressed commercial building, but doesn't qualify for a traditional bank loan due to a recent foreclosure. A private lender funds the deal in 7 days, based solely on the property's potential value and the investor's track record. Had nothing to do with, a bank is going to look and say, oh my God, no, I can't give you the money because you just had a foreclosure, or you just, you were late on your mortgage or late on your cards or something like that within the last 3 months. So we can't give you a loan to flip this property that's going to make X amount of dollars. So they, their risk assessment is very uh, uh it's very it's conservative in approach to making sure that these banks are very conservative in their lending practices. So choosing the right financing options. Choosing the right financing options. When seeking commercial funding, businesses and investors have several options, each with its own advantages. Private lending often stands out as the most flexible. Everybody wants private money, right? And the most efficient solution, especially when it comes to speed, accessibility, and customized terms matter. See, people want that private money because you can get it fast, it's accessible, and it can kind of customize the terms for it. So the more private money you can use, the better. Okay. Making the right move, secure private funding today. While banks and credit unions work for some, private lending provides the speed, flexibility, and accessibility that serious investors and business owners need. So don't let the red tape slow you down. Get funded fast and grow with confidence. That is how private lending and funding works. So here's some quick tips for everybody. Okay, remember this is just an overview today. As a commercial loan broker, you're more than just a middleman. You're a key player in helping businesses grow. Building trusting relationships with clients and lenders is key. I can't stress that enough. That is key. Your expertise helps businesses succeed. You have to be the expert. Me and G is dealing with a deal right now, and we're dealing with a client that's really in the way, right? And with this particular deal, he won't allow us as the experts to be the experts to structure this deal properly because this particular client is used to having his hands on everything. Well, building trust relationships with your clients you being the expert, you have to be able to help these businesses succeed by knowing exactly what it is that they need and how to facilitate their goals. Okay, you have to know that. So this is the basic the gist of commercial lending. This is the gist of it. Okay, this is the gist of commercial lending. This is an overview of what you're going to be learning, what you're going to be learning over the next 6 months. But commercial lending, you're basically being a broker. You're the intermediary between the customer and the lender. You have to always remember that you're the resource. You're the solution maker. So when you start thinking of yourself as being a solution maker, then that's when it starts clicking in. That I have to be the solution maker for my clients because they have no idea what they're doing. That customer that I was just speaking of with me and Gene, he has no idea what he's doing. But he won't let us be the expert. Okay? He won't let us be the expert. Okay? So you have to make sure that you're the expert. You're the voice of reason. You're that listening ear so you can dissect and hear exactly what it is that they need so you can get them the proper offer. See, the thing is when it comes to selling this commercial money to, another thing that I noticed is that these clients, they really, once again, they just don't know. They don't know what the process and the procedure to funding is. And what I've learned is as long as they feel that you are knowledgeable and you have their best interest at heart, they won't even shop you a lot of times because they get tired of shopping. They get tired of, you know, these different loan brokers and people taking advantage of them and things of that nature. Well, if they can feel comfortable with you, if they can feel comfortable with you and know that you have the resources that they need and you know exactly where to place them as a commercial broker, then you're going to win those customers over most of the time. But you have to know what you're talking about. Okay. Come on, guys. What questions do you all have? This is just our overview of what we're going to be learning over the course of these next 6 months. This is just kind of like the preview. All right, we're going to dive deeper into the we're going to dive deeper into the commercial lending training in next week. No, we got the next actually. We got the next. What questions do you all have? Come on,
I
talk
had
to
a
me.
question.
Go ahead, Sean.
Okay, so I've as a just a certified broker and versus the commercial loan broker, is there any license I need to broker besides just the certification?
No, that was commercial. No, that's another beautiful thing about commercial. So you don't need a license like a residential loan officer would need a license to present commercial.
Well, what if they challenge me, say, well, I only work with licensed, like they're always like a real estate agent. I am not a real estate agent, so
Okay.
they're used to that. What can I tell them to stave that off in confidence?
Well, you're not with a licensed commercial. I mean, you don't. There is no license for you to go out unless you just want to get a certification. You can let them know that you're a certified broker. I have my certification. Let them know you have a certification, but you don't need a broker's license in a commercial world to facilitate commercial deals. Just let them know that.
All right, gotcha. Thank you.
Yeah. Any other questions?
Well, I got a question.
Go ahead.
What's the difference between working capital and a letter of credit?
A letter of credit and working capital.
Yeah.
A letter of credit is basically a promise that the bank is giving you of credit or approval based on whatever terms that they're setting forth in that letter. They're basically saying if you do this, and this, we'll give you this amount of money. That's your letter of credit. Okay. And then what was your other question? What's the difference between it? What was the other one?
Working capital.
And so, I mean, working capital is quick money. It's quick money to solve problems such as term loans or lines of credit. A line of credit to solve things like payroll expenses, I don't know, marketing expenses. A letter of credit. A letter of credit is typically used in bigger transactions with buying, properties and things of that nature in commercial lending area. Okay. So that's typically when the letter of credit is used. Did I answer your
Bye,
question? Okay,
everybody.
Thurman?
Yeah.
Okay. Hey, Catherine.
I gotta go. I get up too early.
Okay, Catherine. All right. Good seeing you on the call.
All righty. Thank you. Have a great day.
You're welcome.
All right. Bye-bye.
Hey Mo, I just wanted to touch on what Sean had asked about the difference between a licensed realtor and a broker without getting too far into it. I think there's a distinct difference between the function of a realtor and the function of a loan broker. Because as a licensed realtor, you're advertising somebody else's house for sale, et cetera, taking pictures, and that's not what we do.
Right.
We're asserting the loan portions of it, not trying to sell something.
Yes.
So on many levels, there's distinct differences between being a licensed realtor. That's all.
Yes. Yes. Oh, absolutely. I mean, a realtor and and a loan broker is completely different. Completely different. Yeah, he's right. I mean, as a realtor, you've got to go out and show properties. You need to have a license to do that according to regulations. But to broker commercial funding and investment deals, things like that, you don't need a license for that. And thank God that you don't. Okay.
I appreciate it.
More flexibility. You're welcome, Sean. And keep up the good work, Sean. You're killing it, man.
Thank you.
Okay. Any other questions? Any other questions?
Yeah. Anybody heard from Joe today?
Yeah, I talked to him a couple of times. I don't know why he's not on training.
Yeah, he didn't respond to my text.
Yeah,
But all right, man. Have a good weekend, Mo, and everybody.
Okay, guys. All
That's
right.
it.
So you're welcome.
Mo, I wanted to ask the question.
Sure. Hey,
Hello.
Deborah. Good to see you too,
Hey,
by the way.
how y'all doing? Yeah,
Good.
I've been got some stuff going on, so I've been missing a lot here lately. But
That's all right. Glad to see you.
thank you. Question. So G2 Global will have the lenders on board for us to kind of connect with. Is
Oh
that the
yeah.
way?
Oh
It'll be
yeah. We already
okay.
have them. Yes, we have them
Okay.
now. Yes.
So now it's just us knowing which product we can
What product to
yeah.
service them with? Correct.
Right. Okay, I got you.
Yep.
I understand.
What product to service them with? I mean, here's the thing. I always say, bring back any type of deal back to the network just to see if we can do it. For most,
Okay.
most cases, we may have a home to place it. You just got to bring it back and say, hey, is it something that we can do for, these particular customers? Okay, just bring it back.
Okay.
Yeah, but we can pretty much do all type of loans. Okay.
Okay, so I can put that out there in the group that I'm a part of that we have can meet your funding needs and that type of thing.
Absolutely, absolutely. Are you
Okay,
inside Discord with us? The Discord group?
I am.
Okay, just make sure that you go to resources and
Hmm.
there's training, there's flyers all, in resources. There's gonna be videos there that you can share that I'm doing all marketing videos for the ambassadors now. That's going to be kind of just open and not going to say my name or anything like that, but it'll be generic so everyone can utilize it. Okay.
Yeah, I saw some of the resources. I haven't been in my other real estate group lately, but I'm going to start um hitting it daily because
Okay.
deals are put up all the time that they need funding for. So
Yeah. Yeah.
I'm gonna try to get some deals brought in.
Definitely refinancing. You can refinance properties. People that need to pull out cash. People need to, and like, man, I need to get 50,000 from somewhere. How's your credit? Do you have a property that you own? Do you have a business? Do you have cash flow? You're trying to find out as loan brokers. You're trying to find out where the money is.
Right.
Right?
Gotcha.
You're trying to find out if they're making money. You're trying to find out if the credit is strong enough for us to put them in. So these are identifying questions that you're asking as you're making a mental note as on how and where to place this client.
Right. And if we run across a group that seem to be a fit, we can bring those to you and you can vet those out. Is that correct?
Absolutely.
Okay.
100%.
Okay. Because I was talking to a guy the other day and he said his company represents 15 banks that do loans that nobody else will do.
Oh, nice.
So I've got to find more out about it, but
Yeah,
I'll
I like
shoot that over to you. Yeah,
I'd like to hear more about that.
absolutely.
What's up,
Okay, thank
Cleveland?
you so much.
You're welcome, Deborah. Good to see you again. Hopefully everything is well with you.
Yeah, life just punches you sometimes, so you get back up, right?
Keep your wings up.
Yep. I went to a seminar today. It wasn't about money or lending, and the lady said her motto is "Fly or Die."
There you go. Okay, Cleveland, what you got, man?
I wanted to, when will this recording be available?
I will have it available probably by Monday.
Okay, all right. Just wanted to know that.
And
All
you're
right.
still recording right now. You didn't stop the recording.
Yeah, I know. I'm still in there.
Okay, y'all have a great weekend. Take care.
Okay, thanks, Deborah.
All righty, sure. Bye.
You too.
All right.
Damon, you got a question for me?
I should have kept my mouth shut because I just forgot what I was going to ask, trying to listen to everything. Sorry about that.
Don't worry, man. It comes with old age. No blow. All right, guys. That's our training for today. Hopefully everybody got something out of the prelay.
Absolutely.
Training.
Where's the test?
I remember what it was now. So when you're listening to the person to see what they're working with, I guess one of the things I used to get caught up with was whether it was a secure loan or unsecure loan.
So
And,
the difference is unsecured means real estate. It's being secured by something tangible. Unsecured means that it's basically your signature. It's a signature loan. There's nothing tangible to it. So it's going to really be based off of your credit and how much money you're making.
right.
Secured means that it's being backed by some collateral. And in our arena, it's going to be real estate. We don't use anything like vehicles or IRAs or anything like that. But that's the only thing that we secure loans. So when you're talking to a customer, when you talk to that client, you just need to know if they got some real estate involved. Is there any real estate here that I can use to give you funding?
Right.
Okay. If it's not, then that automatically puts them in the qualification, not qualification, but in the category of unsecured funding. And now you just need to see if they qualify for that. Okay.
So like a restaurant that's probably pulling 10 grand a night or whatever.
Yep. Something like that, we could do MCA funding for them. Wouldn't even care about their credit. They're pulling 10 grand in a night, You can do MCA funding for them. Get them $50,000-$60,000 in like 3-4 days.
Right. Okay.
Something
Gotcha.
quick. Okay.
Yes. Thank you.
All right. Okay. So, all right, guys, that's it for today. It's 26 minutes after the hour. Hopefully this was a good start to our commercial 6-month course. Okay, and it was informative. We will go deeper into commercial lending on our next session. So just be prepared for that. And once again, I will see each and every one of you all at the top. Okay.
All right. Good night.
Thank you.
Excellent training.
All right,
Yes,
thank
it
you.
was. Thank you, Mo.
Very, very
Thank you.
Guys.
Appreciate it. Thanks. Bye.
All right. All right. Thanks, Sean.